All right, thanks Ray for that nice warm introduction. Guys, I'm just privileged to be here. It's been quite a ride. I've been with VectorVest now going on my 21st year and really have been here since seems like the inception of the company. Of course, I did come along many years after it actually started, but boy, I've seen the growth and it's just been a tremendous company to work for. This presentation here, buying low and selling high, is what it's all about. If you get this right, it can absolutely change your life. And so that's my goal. My goal over this next 50 minutes or so is to change your life. And I think if you pay attention, it's going to get the job done. So let's get to it. The first thing that we've got to understand, and we'll harken back to what Todd brought to the forefront the first talk this morning, is that one of our fundamental philosophies is that we believe in buying rising stocks in rising markets and selling falling stocks in falling markets. And this presentation is really going to bring that to light, because when you do it right, it can have life-changing results, okay? So let's talk a bit about it. How do we go about this process of getting that right? The essence in the stock market, the essence of making money in the stock market rather, is the fine art of buying low and selling high. So the first thing that we have to tackle is that it's an art form. It's not an exact science. It's something that you get better at over time. However, I have great news for you. VectorVest has been working at this for more than a couple of decades, and we are the best in the business. And it's my job to show you how good we really are. And so that's what we're going to do. We're going to show you the art form that we've developed, and we're going to show you then how you can take full advantage of that. Before I begin that real journey where all the meat is on the bone, I think it's important, particularly for those that are new, just to broach into the subject a bit, hit some of the critical questions and obstacles, and then show you the solution. Okay, so first obstacle, I guess if you will, is how do we know when a stock's price is low? Does anybody have an answer to that question? Well, is a stock's price low when it hits a 26-week low in the stock market, like I'm sure a lot of stocks are these days? Do we feel like stock prices are low right now, or could they go lower in the future? By the same token, what about stocks that seemingly somehow are hitting 52-week highs right now? Cheniere Energy, one of the stocks Glenn talked about last presentation, very recently hit a 52-week high. Truth of the matter is, that stock price could certainly be low. And so what's low to a buyer is high to a seller, so who's right? So when we talk about that art form, what we need to do is work out, do we want to be the buyer or the seller? And what we're inevitably going to land on is that by definition, a stock's price is low when it's more likely to go up than it is to go down. And so, like the fine art was a couple of key words on that prior slide, the real important word on this particular slide is likely. It's our job as investors, traders, whatever the case may be, to assess likelihood. There are absolutely no certainties in the stock market. So if you're out there looking for the holy grail that never makes a mistake whatsoever, you're not going to find that. But what you do is you get really good at establishing likelihood. And there's been a couple of camps out there in the general investment community that have been going about this business of, well, how does one know when a stock's price is more likely to go up than it is to go down? So you have fundamental investors and you have technical traders. And what you're going to find out is that here at VectorVest, we combine the best of both worlds. But let's really break it down first, because if we remember what Todd was saying earlier on today, fundamental investors who hold for the long term say, they buy stocks when they see attractive situations regarding value and safety. And what did Todd say was the key thing that drives value? Earnings. So earnings is a huge focal point for VectorVest. And so when we look at attacking the stock market and buying stocks low and selling them high in the future, our first objective is to make sure that we're buying the very best stocks to get that job done. And then what we're going to find out is when we can nail market direction along with that, boy, that's when it really gets fun, okay? But just remember quickly, in terms of fundamentalists, when we're looking at safety, what are we looking at? We're looking at companies with outstanding financial performance, consistent predictable earnings growth, above average earnings growth, steady increases in stock price, low debt to equity ratio, and high sales volume. Why do we look at that? Well, certainly, as companies grow their earnings quarter after quarter after quarter, year after year after year, investors like that. Seems like, boy, if I want to make some money in the stock market, I'm going to go out there, find a company that has an incredible track record. Because what does that mean? It means in the future, I should see that same beautiful increase quarter after quarter, year after year after I make my purchase. The other, maybe lesser thought of quality that we're talking about here is, does anybody ever remember a drug called Vioxx? We're going back in some time here. So the millennials probably have no idea what I'm talking about. But that was a billion-dollar problem for a little old company called Merck, right? And did Merck go out of business? Even being hit with billions of dollars of lawsuits in the fray of all of that was going on? No, they're still around today. So they can withstand these little bumps in the road of billion-dollar lawsuits. So high safety companies not only grow their capital quarter after quarter after quarter, year after year after year, they also have incredible fortitude to withstand situations much like what we have now with a very, very uncertain market. Technical analysts, on the other hand, they're more short-term oriented, right? So often thought of as traders, and they time their purchases when they expect a price to go up. So what are they going to use? They're going to use things like breakouts, support and resistance breakouts, uptrends, higher highs and higher lows, increasing volume in terms of conviction behind that price rise in the stock, and often news-related situations. Like Glenn had Beyond Meat in his slides earlier. Did you guys see where the CEO of Beyond Meat got out of his vehicle and I think attempted or plausibly did bite somebody's nose? I guess he's a meat eater. but you know, the funny thing is, I mean, they're both right. You know, what we want to do is we want to take situations that are happening where we have a nice, strong, fundamental company, but we also have a catalyst that's going to be helping to drive those stock prices higher. That's going to come by way of technical situations on the stock charts themselves, and also even news, and it could be macroeconomic news. You know, what are some things that could turn this market situation around now? How about some resolution in Ukraine? You know, how about a real strong softening of inflation? Things of that nature. So what we want to do is combine it all and condense it all down and make the very best decisions possible. So VectorVest is the only service that combines the power of fundamental valuation with the insights of technical analysis. And friends, I have been saying and using this slide for 20 years. And I think we're still, as far as I know, the only service out there that combines the best of both worlds and does it well. I might add that little caveat. But our mantra is that we advocate buying safe, undervalued stocks rising in price. The question becomes, if you haven't thought of that question yourself already, is are they right for you? Well, let's talk about it. Let's have a quick peek. So what I want to do is get into VectorVest here quick. And Glenn did a nice job with Stock Viewer here and with Watch List. I'm going to go back to Stock Viewer. Over here on the left. Boy, this thing's slow. There we go. And in Stock Viewer, we said that we leave a track record, right? So what I'm going to do is I'm going to go back in time. I'm going to go way back in time. One of the things that I want to bring to the forefront in a big way right now is that it's our experience, and has always been our experience, that high VST vector stocks with the best combinations of value, safety, and timing, are the stocks that tend to outperform the market, particularly over the longer term. And then when we get some of the highest safety stocks with those same attributes, boy, it really gets good. So let me show you what we mean. I'm just going to go back to the first full year that we have data. You can see where we were actually a weekly service at this time. This is all the way back to 1996. VectorVest has been around forever, right, guys? Some of you have been with us virtually the entire time. I know that are in the audience right now. I'm going to go ahead and click on OK here. And when I do, what it's going to do is populate the stock viewer with the stocks that we would have found at that time. And so I'm simply going to make sure that it's sorted by the stocks with the best combinations of value, safety, and timing. And when I do that, I get little old companies like Aflac, Paychex, Walgreen Boots, Fifth Third. Sure. Anybody ever heard of these stocks? Hopefully you bought some of them along the way. Let me show you what's going on here. I'm going to come here to the top. You're going to learn more about this tool later on. I'm just going to quick test, say, the top 20 stocks here and show you if VectorVest is any good or not at putting you in situations where you can outperform the stock market. Little old United Health Group is only up 6,466% since that time. Sherwin-Williams, only 2,956. 15 of these stocks went up, 5 went down. Is that a pretty good start? Do you think if we focus our investments on high VST stocks that we're heading in the right direction? Because this is just buy and hold. Boy, it's really going to get good when we start looking at being able to time the market, only buy when it's the best and most appropriate times to be long, protect those profits when markets fall, and just keep doing that over and over and over and over again. The next slide in your book deals with safety. It says, all right, let's do the same test with the highest safety stocks. People always say, man, I don't want to go after safety. That's going to be boring. Those stocks don't go anywhere. All they do is they go up a few percentage points here, a few percentage points there. Man, I want to go out there and buy Beyond Meat. You know, that sucker's up 20% today. Well, let's see what the track record looks like with some of these high safety stocks. And guys, you can go back to any time you like historically. It's getting a little more challenging now because we've had a pretty substantial pullback in the stock market. But look at this. Given the time to operate, do you think owning a good selection of top relative safety stocks is a good foundational starting point for you in terms of building your wealth over time? You know, what they tell you on CNBC is all you want to do is just buy a little piece of the S&P. You want to do it every month. Doesn't matter whether the market's going up, going down, going sideways, and what are you going to get? What's your performance going to be? 6% a year? 8% a year if you're lucky? What are we looking at here, Ray? What's that number say down there? I can't hardly read it. 37. Yeah. 36, 37%. That's year after year after year. Have you ever heard of the rule of 72? You take your annualized rate of return, okay, divide that number into 72, and that's how long it takes you to double your money. So if you start with 100,000, then you got 200,000, in this case, in about 2 years. And then that 200,000 becomes 400,000 in the next 2 years. And then the 400,000 becomes, and here's where it starts to get fun, you know. The 400,000 becomes 800,000. And then the 800,000, that's where I'm at now. That's when it really gets fun. Okay? So just buying high relative safety stocks and holding them for the long term is your foundation to making money in the stock market. When we start tying that into market direction, protecting these portfolios in the worst of times, collecting the dividends that these portfolios pay over time, the numbers go way up, guys. This is just raw. They go way up. Okay? Let me get back over here. Now that's buy and hold. I mean, if you want to do buy and hold in VectorVest, boy, you can do it. But my job is to show you how to do even better than that. We're going to do better than 39% a year, Todd?
Yay.
Yay. He says yay. We're jaded here at VectorVest, folks. You know, 37% doesn't seem like a whole lot anymore. All right. So high relative safety stocks, they're usually classified as prudent or conservative, and they've been proven to go up over time. We just showed you that. I encourage you to go back, do some of that, pick different dates. Do it to your heart's content. And what you're going to find is a system of just buying high relative safety stocks is a great place to start. Okay, so I did include in your paperwork that you can print out some historical look at this. It's actually, the number's gone up. It was 35.6. So what are those safety stocks still doing, Jim? They're still going up. They just keep going up. Here's where it gets fun. Everybody ready? The secret weapon. Market direction. Only problem is, I dropped the mouse. I got so excited I threw the mouse across the screen. Market direction. Market direction is the single most important thing to know. The single most important thing to know is whether the market is going up or down. Everything follows from that. Very wise words from our founder, Dr. Bart DeLito. Guys, market direction is a secret weapon because we can do even better. And you're going to see a heavy dose of that this afternoon. That's when it's really going to get fun. We're going to start getting your feet wet a little bit, though, in this presentation here. So it's long been an expression in the market, let the trend be your friend. At VectorVest, we do it better than anybody else. What we want to do, again, is buy rising stocks in rising markets, sell falling stocks in falling markets. The VectorVest market timing system has never failed to signal a major move in the stock market. That's a bold claim, isn't it? What do you think the track record of this is for some of the folks that you see that have a very heavy presence on a lot of major financial networks and newsletter writers? You know, that guy Prechter, he's been bearish since the early 80s, right? So what we have in VectorVest is a place where you can get matter-of-fact, common sense information showing you when it's okay to be buying stocks and when it's not okay. And in fact, selling stocks short for profit if you're willing to do that, or buying contras, whatever the case may be. But this graph is so important, you need to make it part of your daily routine. The market timing graph clearly shows when the market is rising, falling, or transitioning and gives explicit market timing signals. So let's go take a look, because the VectorVest market timing graph is your key to success. Follow the signal that best fits you as an individual. So we're going to get over there and take a look. All right, so here I am. Oop, get out of that. I might have. There we go. Seasoned Pro. We'll get fixed right up. Okay. So in order to access that graph, we're going to go to the timing tab within the platform. From that tab, we're going to go to market timing graph. Once we get in there, let's first by just taking a broad look at things. When you take a look at this graph that's on your screen right now, and you consider some of that guidance about just buying a little bit of the S&P every month, you say, boy, in reality, that's not terrible guidance. I mean, the markets do tend to go up over time. But what else do you see? Boy, I tell you, they got some roller coasters over here in South Carolina just across the border. And I don't think they go down quite as fast as some of those dips, little dips that you see in the market. Like, anybody remember the COVID collapse, right? If we go back further, does anybody remember the financial crisis of 2008, into 2009? If we go back even further than that, does anybody remember the dot-com bubble of 1998 into 1999? And so at VectorVest, we feel that's not what you want to do, is try to hold and see fortunes evaporate into pennies and have to reinvent yourself over and over and over again if you're lucky. So what we feel is a better way to go is to buy stocks when the markets are low and sell them when they get high, and buy them when the market gets low and sell them when it starts to really turn over and go down, and buy them when it's low. And who do you think is going to make more money in the end, even with the same stocks? If you buy when the markets are low and sell them when they're high, versus just try to buy and buy more all the way through? Well, the answer should be obvious. So hopefully it is. But the trick becomes, what do you hear on TV all the time? You can't time the market. It gets my blood boiling every time I hear it. And I think there's some confusion, because then they'll bring up a chart analyst telling you what's happening with the current stock and whether it's high or low, right? What they're talking about is you can't predict the market. And I'll be the first one to tell you that. In other words, I can't tell you what the market's going to do next week. What I can tell you is that I've been bearish on the market for a good little while, most of the time this year, and making money while the market's going down, versus trying to buy stocks every time it looks like the market's going to take up off a low. And so we're going to talk about that. Now, truth be told, we did go bottom fishing 4 times this year in the Jockey Club, which is our daily trading room, and we made about 30% year to date on very short bottom fishing opportunities. But that's what VectorVest can do for you. It can, even in the worst of markets, give you indications on when's a good time to make a really good, solid, quick buck. Okay? And when markets get on a roll, boy, the money just starts funneling in. 2020, guys, 2020 into 2021 was life-changing for me. I mean, I was making more money per day than my salary. Okay? Per day some weeks. I mean, Monday, Tuesday, Wednesday, it was like Groundhog's Day. So let's talk about how we do it, okay? First things first, let's just start around COVID, because everybody remembers that. Actually, I should walk you through the hits. Let me walk you through the hits first. You see this peak back here? Let's start here with a dot-com bubble. You see this? What's that high point there? 3.6? Okay. Can VectorVest get you out of harm's way before the market does nothing but really go down for several years before it starts going up again? Let me go to VectorVest Views, and let's go to March of 2000. And my presentation might end up running long, but I don't care, because what I'm going to do is convince you that VectorVest is all you need, and this presentation is all you need to do really well in the stock market, okay? I'm going to go to March, and we said that it peaked there pretty close to the 6th, at least on a weekly chart, right? I need to go back to 2000. What am I doing? Or 99, I'm sorry. Boop, boop, boop. What was it?
March 6th of 2000.
2000, yeah. I'm looking at the dates there, Todd, and I was like, I'm in the wrong year, man. See, I know the dates. All right, March 10th of 2000, okay? This is what we said. Go down here towards the strategy. Oop. All right, what did we say? Now listen, this is a daily investment newsletter that goes out to all of our subscribers. Okay, so we're talking about market direction and market guidance. Here's what we said that day. Well, I chickened out at the first sign of a downdraft, and I feel much better now. I'm more concerned about preserving capital than I am about wringing out the last penny of profits from this astounding rally. Although the price of the VectorVest composite rose again last week, the BSR is sounding alarms. I continue to believe that downside risk outweighs upside potential. Prudent investors may continue to do some selective bargain hunting, but caution is advised. Aggressive investors and traders may continue to play the high flyers to the upside, recognizing what? That a major downturn is likely. Guys, this was written when? 310. The peak on the weekly chart was what? 3.6. Do you think you can find another software company, another stock analysis and portfolio management company anywhere else on this planet that was telling folks that a major downturn is likely on this date? All right, let's put some more. Oops, that's Todd's graph. I can't see the graphs here hardly. Let's put some more color to this. Let's go forward a little bit further. Yeah. Oh, there we go. How about here? I want you guys to remember this date right here. This is the financial crisis, or what soon would become, at least by about June of 2008. Right? This is October, November of 2007. Would that have been a good time to tell you that a major downturn is likely? All right, well, let's go take a look. Again, we leave footprints in the sand. So we're going to go forward here, this time to 2007. We're going to go to November the 2nd. Now I want you to notice something here, because we're going to talk about, you see this red square? That's what's known as a confirmed down call. So what might on the surface at this point seem like, well, boy, these guys are pretty good at predicting when things are going to happen. What we're really doing is reacting to the information, the useful information that VectorVest provides by way of market analysis to know that these situations are on the horizon. Okay? The confirmed down was the day before, so we'll click on the 2nd, and what does it say here? A word to new subscribers. The confirmed down signal that we received yesterday could be the entree to a long bear market. We aren't there yet because earnings are still rising according to our method of analysis. Does that sound interesting to you, Todd?
That's the one I saw. All right, I was new in the seat and I read that and I went, oh.
Yeah, that's the one Todd was talking about. Yeah. Eerily kind of sounds like, potentially anyway, the current situation.
And scroll up.
Right? But it says, we aren't there yet because earnings are still rising according to our method of analysis, yet we no longer appear to have the support of an accommodative Fed. Does that sound familiar? That can make things very bad for the stock market. So don't be deceived by the endless parade of experts who will appear on TV and other places telling you to buy stocks. This is not the time to buy stocks. Now, we were much more on the very precipice of the ball dropping on this particular essay than we are current. But the situation is very similar indeed, okay? Now, if we come up here and go back to the chart and do it one more time. Hopefully I've got the chart open still. Oh wait, let's have a bit of fun. Does anybody want to have some fun? Todd, you want to have some fun? Let's have some fun, man. This thing bottom, when is this? When's the bottom? March the 9th, 2009? Mamma mia. Watch this. Here we go. What did we say March the 6th of 2009 before it even bottomed? Look at this. The market is itching to rally. While stock prices have been going down since the market broke out of the wicked wedge, I've been watching a little sideshow. And he's going to show you some of the things I'm going to talk about in the market timing graph here in just a minute. Okay? But he's noticing that with our core timing indicators on the stock market, they're beginning to hit higher watermarks while the stock market is hitting lower watermarks, which is known as a divergence. Okay? We saw that in 2009. We've seen it plenty of times since. And that's what aids us and helps us in making these big calls. Okay? Now, what we did was, if we fast forward and just take it a day at a time here, boy, look at the color guard. The color guard is, boy, it looks like today's color guard a little bit, doesn't it? Lots of red and a little bit of yellow in there. For those of you who are riding the wave, we're playing the downside of the market with the high. So we've been short, guys, and been short, taking full advantage of that market down since November of 2007 predominantly. There was a little piece in time there where through late March of 08 into June 6th, the stock market actually went on a pretty good roll. And then the financial crisis hit, and we were back on these contra ETFs, making money hand over fist. Now the stock market is ripe to explode the other way, and we say, all right, we're going to go along with one of these searches when the market takes off. And guys, watch what happens the very next day here. Uh-oh. I lost the screen. I lost the other screen. So, listen, all right, thank you. I can roll, I could have just given you the facts, okay? But let me go forward and show it to you because it's better to show you if I can. So for those of you who are riding the wave, we went long with Jailbreak that morning, March the 10th, 2009. Never forget that morning. That was another life-changing moment for me. That morning, first thing I do is kind of begin to roll out of bed, grab the remote, don't have the coffee yet, right? Flip on CNBC and put it on mute. That's what I always do first. But I looked and I said, boy, the Russell was up 6%, the NASDAQ was up 5%, and the Dow was up 4 or 5%, and the S&P was up, and boy, I was like, wow, I got to get to work. We got to buy some of these stocks. Let me go over here to, see, this is where I start talking about all the fun stuff, which is the life-changing moments. But I think it's good to add the color, because without the color, it doesn't mean as much, at least in my view. You got to have lived it. You got to have done it. You got to have, seen it and know it. And so anyway, if I go over to this tool you'll learn more about this afternoon called Unisearch, I go back here and go to searches bottom fishing, right? And we go to that little old booger called Jailbreak that we went long with. Guys, I'm going to tell you, when you get to market bottoms, there is no better search than this one right here. And you just got to trust it, because it's going to scare the daylights out of you. But boy, is it fun. Watch this, March the 9th, because we would have bottomed that morning of March the 10th, okay? So we would have gotten this would be our list that night. Century Aluminum, oh my God, Citigroup. Citigroup's what started the rally to begin with. They said they turned a profit the first quarter of the year, and the stock market took off like a bird. Watch these stocks, guys. Those stocks are up 1,200% to today. 1,200%. Is that buying low and selling high? I'll ask it again. Is that buying low and selling higher? And we didn't even, watch this. Let's go back 2 weeks. See, Glenn's got me fired up now. I'm going to start yelling. Let's go back to 2009. All right, let's go forward to April. I can't see the bottom of that sucker. There we go. Let's just run it for about a month. 200% in a month. Todd, would you be happy with 200% in a month or two?
I would be happy.
I would too. Look at this thing. Citigroup went up 203% in a month. Triple leverage financial ETF up 200% in a month. HBAN up 200% in a month. Look at this one. Las Vegas Sands up 422% in a little over a month. Guys, this is how good it gets with VectorVest, okay? I mean, I'm going to some of the best opportunities that have ever been presented over the past couple decades. I get that, but that's where the real fun is. And I got to tell you, the lower this stock market goes that we're in right now, the more apt you're going to be to get those kind of results in the not too distant future. If I show you how to do it now, you're going to be able to do it then. You need VectorVest now more than you ever have, because that opportunity is coming. And it's probably not this week, it's probably not next week, and it may not even be in the next few months, okay? But when it comes, we're going to be there to show you how to do it. All right, so let me walk you through our core analysis, though, now that I've hit some of the high water marks, okay? All right, so I'm going to get back over into VectorVest here quick. Clay, see if you can get the program open for me. Perfect time for a sip of coffee. All right, we got on a roll there. Sorry, guys. Bring in the heat. I could keep doing that ad nauseum. We got you out before the COVID collapse, or at least really on guard before it even happened, within days after it started. Even our confirmed signal told you to get out of harm's way. So it just happens over and over and over again. What I'm going to do is show you how we do this, okay? So a couple of things. Over here on the right, whenever you open up a market timing graph in VectorVest, you're going to be confronted with the top price graph. That is the 9,000 stocks tracked as one unit. So instead of isolating things off into the Dow, the S&P, the NASDAQ, we just lump everything together and produce a straight arithmetic average, okay? Then what we do is we apply some core indicators to that. It's going to be hard for me to see, but I'll be able to drive the message home as follows. So we had a market coming up into the COVID collapse that was going what? It was going up, 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 right? Even hitting a new high before the collapse happened. We've got a couple of indicators that are going to give us very useful information to let us know to start to get on guard, okay? I'm going to start with price, and then I'm going to come down below and get even better information. But when price, let's just use price alone to start things. We came up, hit a new high, right? As price starts to turn over and fall, I'm going to come down here to the bottom. The first signal you're going to get from VectorVest telling you that the market is changing direction is this little guy right here called the primary wave. So this is the first day when price closes below the closing price from a week ago. That's the first signal you receive from VectorVest that the market looks like it wants to try to change direction. Okay? So when markets are high and a primary wave comes to roost, that's your opportunity to clamp down and make sure that your portfolio doesn't unravel. That's where you want to start thinking about becoming cautious, using puts, going towards cash, tightening stops, doing things to minimize future risk. Now, as price goes down for another week, then you have preliminary signal of sustainable downtrend. Now, if I come to the bottom, from the primary wave, we're going to then go to the confirmed call, okay? Now, the confirmed call came in here. Now, in order for a confirmed signal, so we're going from one extreme to the other, and then we'll come back in the middle. We have the earliest signal possible, which is the primary wave. The confirmed signal requires 2 weeks of price movement, week over week. And it requires confirmation from this indicator here called the buy to sell ratio. So when price goes lower week over week for 2 consecutive 5-day trading periods, and the buy to sell ratio confirms that by going below 1, it produces the signal. And you can see that is, even if you waited till the very last signal VectorVest provides, it could have kept you out of most of the damage from the COVID collapse. Okay? Then, as we come down and eventually get to a low, did we ever have a primary wave up? The answer to that question is no, until here. This is March the 25th of 2020. Does that look like a good idea to start to relinquish some of those puts that saved your bacon, and or even thinking about starting to buy stocks long, realizing we might want to walk a little bit before we run? Well, let's see what happened. I'd say that would have been a pretty good decision. How about you? Okay. And so anytime a market goes on a major move and the primary wave then gives you that first signal that things are really beginning to head the other way, that typically becomes your very best opportunity to buy stocks in this case, or get defensive in the prior case. Then once the signal is confirmed, for those of you that have bigger accounts, multi-million dollar portfolios, you're most concerned with preservation of capital. You probably don't want to really attack the stock market again, even until you get a confirmed up or a green light, which we'll talk about here in a minute. Probably don't want to start throwing multi-million dollars at the stock market just on the first little indication of bounce. I'm not an idiot, right? But boy, was that a good time to think about it right there? Market just kept on going. Boop, 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 boop. Plenty of opportunity there, right? So this was the first time price went higher week over week for 2 weeks, and the buy to sell ratio confirmed that by going above 1. Now guys, we have some other specialized things that we do. The most important parts of the guidance are already underway. This is really something that can kick things up in a big way. And that is, we have levels. So with these indicators, particularly with the MTI, we'll start there. It's on a 0 to 2 scale. Now the MTI combines the price movement that we were just analyzing. It combines the buy to sell ratio information, which is the number of buys divided by the number of sells in the database, which is why we were leveraging that. So the buy-sell ratio is high when there's more buys than sells. The buy-sell ratio is low when there's more sells than buys. Okay, that's why we use that as a confirming indicator. So we want to buy stocks when most stocks are earning buy recommendations, more of the stocks in the database, and get defensive when more sells begin to populate in the database than buys, right? So price, the buy to sell, and the relative timing. Glenn talked about relative timing this morning. So we look at that on the market level as well. We combine all of that information into one single comprehensive indicator for timing the market. And it's 0 to 2, as I was mentioning. Once you start to get up into the 1.5s, you start looking for a market that is potentially getting ready to turn over and head the other way. So the market becomes overbought, okay? So as we were even getting up here, what's our MTI ratings at that time? So I'll just highlight it here and you can read it over there on the right, 1.5, right? What did the market do just for the next several weeks? See how it really turned over and dipped quite a bit, right? What was the, now the MTI here, as price made a higher high, the MTI was making a lower high. That's known as a divergence, okay? And that's how we knew, even prior to the collapse, which of course came out of nowhere, nobody could have predicted that, that's not what we're saying. The market was already getting tired to begin with. And when we see these kinds of things, the market then typically begins to really follow through in that direction and in a big way, okay? So that's on, when markets are high. Now when markets are low, when the MTI gets down below 0.6, we start searching for a market bottom. Now your first evidence that a market bottom is truly in play, at least mechanically from VectorVest, was what? The primary wave up. So here, since the MTI is below 0.6 and the primary wave turns up, I believe, the very next day. We go down here and turn the signal on. 2 days later, sorry. That would have been your most opportune time to go what we call bottom fishing. And that's what we did, ladies and gentlemen, with that jailbreak situation from 2009. we were seeing the same kind of things then that you're seeing here. This happens to be 2018 that I'm looking at there. I went back a little too far, but you can see it all still applies. No matter what market you're looking at, everything that I'm explaining to you applies to that current market situation. Okay? And then as the markets get on a roll and the MTI starts to get up into that 1.5, 1.6 territory, how much higher and fast is the market driving higher at that point? See how it just comes down to a crawl? All of the really juicy price appreciation is gone. Okay? So that's where you start putting on the brakes until it does what? Until it gets low again. Okay? And then that's where all the fun begins, and it just over and over and over and over again, even on the back of the COVID collapse. The buy to sell ratio, we like to see that indicator get down below 0.2, and to be honest, that is the main indication that we lean on for helping us to pick out major bottom fishing opportunities. When the buy to sell ratio gets below 0.2, that is, you'll see us saying things like searching for a bottom on most occasions in the VectorVest views. Okay, so where are we today? With the buy to sell ratio, we are below 0.2, and with the MTI, we are below 0.6. And so I told you earlier that we have gone bottom fishing several times this year, even if it was just for days. And that was in situations like this, where those indicators were at those levels, even back here. And there's been 4 good opportunities so far, and we've made 10 to 20% just about every single one, okay, in just days. Okay, so we've covered a lot of ground, I know to be sure. At the end of the day, all you need is a subscription to VectorVest. We tell you all of this stuff right in our daily newsletter, the VectorVest Views. As you saw, that's where I started. We're going to tell you when these major situations arise. We're going to tell you when confirmed calls come into play. We're going to tell you when the primary wave of the market changes direction. All of that is going to be explained for you right here back in our daily newsletter. Okay? All right, so quickly, I think I'm already beginning to run a bit long. We have a couple of more timing models. I just quickly want to hit on that, and then we'll probably go ahead and send you to break, because I should be coming to the end then anyway. So let me get back to the market timing graph here quick. So over here on the right, we've covered the confirmed call and the primary wave. And as you saw, those give explicit signals, particularly when used in conjunction with our core indicators, right? Now, we have a couple of other timing models. One we're going to use quite extensively this afternoon, so I'm surely going to cover that. It's called GLB RT Kicker. So GLB RT Kicker, you're going to see a confirmed down signal. Price goes down 2 weeks, buy-sell ratio goes below 1. You get signal, right? We're going to get out of harm's way. We're going to go to cash. After the markets come down enough and start going up again enough, really the answer there is start going up again enough, eventually you're going to get a green light in the price column of our color guard. When that happens, you're going to see this green triangle appear on this graph as an opportunity to start buying a bullish campaign. Okay? All right, we'll really bring this forward here a little bit. What you're going to notice is predominantly you're going to be getting green triangles when the market is rising. When the market's really falling, there's going to be an absence of those green triangles. So we're going to be either in cash or short or protecting profits in those situations. Whenever green is populating on a regular basis, we're going to be more along the stock market until real trouble arises again, okay? So that's how this one works. Now, when we say green light in the price column of the color guard, it's right on our homepage. You have this column here. We do not see any green lights right now for any of the days over the last 3 weeks. So we are not buying stocks according to that model right now. In fact, What we see out here to the right is what? We see a C/down. That means confirmed down. That means we are playing the market to the downside or in cash under that timing model right now. And then finally, we have another timing model called the DEW. So I'm going to come over here to the right. This one's kind of like Goldilocks and the Three Bears in that it's generally, the porridge isn't too hot, it's not too cold, it's more in the middle, it's more edible for some even. It's not trying to nail the bottom, it's not waiting as long as the confirmed calls on most instances to change directions. And so what we're looking at right now, we're looking at price, right? We have a white line, which is a 30-day weighted moving average. We have two green lines, which are envelopes, and we have this DPO down here on the bottom. So this DPO acts a lot like the buy to sell ratio for our confirmed calls. It's the confirming indicator for the price graph. So when price goes below the white line and the DPO is negative, that's a signal. So if I come here to the bottom and click on DEW signals, you're going to see the signal began here on 8/29 most recently, and we've been short by this model ever since, or bearish on the stock market by this model ever since. If we go back to the prior up signal, we were bullish on the stock market by this methodology, July 19th up to August 29th. So what did the stock market do over that period of time? Did it go up or did it go down? Went up, right? How about when the down was signaled? Did the stock market go up or did it go down? It went down, right? And so this is going to get you buying stocks early on in an up wave and protecting that portfolio, if not going short, fairly early on in the ensuing down wave. And so that's the methodology here. And it tends to fit right in the middle. So we're going to be using these signals all throughout the session today. I have some examples of results in your paperwork. I'm just going to leave those in there. I've got plenty more examples this afternoon, so I don't feel the need to go in and necessarily show result after result after result. I think you get the picture. If we can buy stocks here and sell them there, our odds of making money in the stock market go way up. And if we can do that over and over and over and over again, what do you think's better? Buy and hold this year? Buying a little piece of the S&P every single month this year? Or protecting profits on each one of these red triangles and buying low on every subsequent green triangle and doing that over and over and over and over again? I hope this resonated with you guys. I'm going to give myself a solid B- on this one, but hopefully you paid attention. This afternoon, I'm going to hit the ball out of the park for you. I'll make sure I do that, okay? But this is the name of the game. The name of the game in buying low and selling high is market direction. We can play it very aggressively with the primary wave. We can play it more prudent to conservatively with the confirmed call. We can go somewhere in the middle with the green light buyer or the DEW. And we're going to do a heavy dose of that this afternoon.